Hey friends, it's Adam here from Oakwyn Realty, the Place Real Estate team. I wanted to check in with you. I've been getting a lot of questions over the past couple of months from investors and potential investors, probably like yourself. We've seen people with a huge amount of equity increase in their homes, and a lot of you are wondering, what can I do to leverage this? What can I do to buy investment property that makes sense in today's market? So what I thought we could do today is go through a couple of examples of properties that we secured for our investors in the past couple of months and show you what the numbers look like, see if that makes sense for something that you might be interested in. The issue or the problem that we face these days with investment real estate is that everything in Vancouver, even Burnaby, even out to Surrey and Langley, doesn't really seem to make much sense numbers wise. A lot of investors are relying on capital gains that increase in value, which is a potential and a really good thing to have at the end of the day. But as we know, when we buy investment real estate, we buy for cash flow. We buy for that asset and not a liability. So if anything does happen with the market, if there is any sort of correction or a values change, or if the government changes policy, all those things that we can't control as investors, we still have our monthly cash flow. We're still safe. We can hold, and it's a long-term play. So let's go ahead. Let's dive into a couple of these examples here. What I thought I'll do is I'll share my screen with you. We're going to go over two properties at two different price points. The first one is going to be a condo in Abbotsford. We actually just put this under contract last night, and I want to show you. Oh, great. It comes up here. I want to show you a couple of comparables for this one. I'll go over the details of the exact property, but what we're looking at here is a property in Abbotsford West. I can actually show you where it is. It's right off the highway. So as soon as you come off here at Mount Lehman, there's a huge little area here that has a movie theater, a huge shopping center. Obviously, it's not doing too much business right now. There's a Walmart. There's a auto mall right here, Starbucks, McDonald's. You've got everything right here, and just tucked in the back here is a residential development. I can probably show you guys up here. And there's about 300 condos in this little building, and it's a really short walk to this commercial space here. Starbucks is like, you could throw your latte through the window to this development. Cute little development. It's not that old. It's out of warranty now, but the units are good. It seems to be, from what I can tell, pretty good build quality. So I'll show you guys. There's been two recent sales, and we landed the unit that we have right in between these two. So this one sold at $315. This one was a little bit bigger, but it wasn't as nice at $327. It also faced the busy the car park here. So I'll show you this unit that we secured yesterday. It did go to multiple offers. There was 3 offers. We won this property. It's going to close at $325. I'll show you some of the photos. Not the best photos, but granite counters, laminate flooring. Let's see here. In-suite laundry. This kind of ugly fireplace thing that we might take out. It's currently tenanted. It faces the quiet side of the building. Sunny patio, as you can see. It's currently rented at $1,250. This tenant's been here since, I think, almost brand new. The rent will be more now. So what I thought we could do is work through these numbers on this one and see how this plays out. So the purchase price here is going to be $325. With 20% down, that's a $65,000 down payment. All right, so this is how I run the numbers for anything cash flow. Any investment real estate with my clients, this is how we run the numbers. So $65,000 down. The government mandates, if it is an investment property, you have to put 20% down. There's no way around this if you tell your lender that it's going to be an investment property. If your intention is to move in, if you want to move in for a little bit and then rent it out later, that's something you could talk to your lender about. So at the moment, we're seeing 5-year rates. They've gone up a little bit. They used to be as low as 1.49. We're going to use 2.1 in this example. Let's grab the property tax here. Property tax is $1,268. Obviously, because it's rented, we're not going to get the grant. So we're going to pay the full amount. The maintenance fee shows at $190. It's actually $221. There's a mistake on there. So we clarified that for our investor. So here's the numbers. Right now, the tenant's paying $1,250. He's moving out at the end of next month. This will re-rent at $1,450 all day long. Now, at $1,450, with $65,000 down, we're cash flowing $150 positive a month. All right, which gives us a cap rate of 5.4%. This is with a 30-year amortization. We can even shorten this, and I believe it'll still just about cash flow. So for this market, even when people are telling you things are crazy and nothing makes sense, it is still possible to be cash flow positive here. All right. Now, looking at your $65,000 investment, if property values don't go up, it's a 12.4% return on your $65,000. Now, there's three main points to real estate investing. The first is capital appreciation, which we kind of spoke about a little bit ago. The second is that monthly cash flow. So annually, it's going to put almost $1,800 positive in your pocket. And also, the thing that most people forget is the principal pay down. So this tenant is going to work. They're paying down your mortgage at about $6,289 or $6,300 every year. So after 5 years, what's that? $6,289 times 5. After 5 years, we've got about $31,400 in equity in 5 years. Now, what does this not take into account? What are we missing here? We're missing property transfer tax. Okay, if you're not moving in, if you're not a first-time buyer, it would be below the threshold, but you're not, because you're likely an investor. So we're missing property transfer tax, which we have to add in here. And we're also missing tenant insurance as well. Because it's a strata, the strata takes care of the building. If the building burns down, blows over, there's water leak or anything like that. If your tenant causes a water leak, or if they ruin your nice new, if you put bamboo floors in and they ruin that, you're on the hook for that. So this property is probably not going to be much. It's probably going to be about $300 to $400 a year for that. All right. So those are the things we're missing. The second example I want to share with you guys is a really, really interesting one. For almost the same price as a townhouse, this is a new development in Hope. It's by a company called Peppermint Properties, or I believe is the developer. They're actually real estate agents as well. They do a lot of development. Now, my client secured this one back in March, and this is a brand new house. So this, I'll show you the development here. This is a development in Hope. I can actually show you where it is, 6387 Beach. Oops, 67 Beach. I wonder if this is going to come up because it might be too new. We'll see. Okay, yeah. So this is where the development is. It's actually not showing up on Google Maps just yet. So you got the Hope Air Park right here. This is, I guess, downtown Hope with the Starbucks, the liquor store, McDonald's, the hospital with a little helipad. Let's see this here. Golf courses right here as well. Falls. And you're just off the highway right here. So this is a small development. It's going to be how many? 16 homes just off here. The highway runs this way. So my client secured this one for $800,000. So what's interesting here, for the price of a townhouse in most areas of Metro Vancouver, they're going to get a single family home. It's going to be brand new. It's going to have warranty, and it was $800,000. This is what it's going to look like. So upstairs is a 3-bedroom unit. That's the main house. I was hoping to show you some more photos here. Doesn't appear we have any. I wonder if I can pull up this while we're talking. So the main house is going to be 3 bedrooms up. The suite is a legal suite, and it's going to be a 2-bedroom suite. So maybe I can just actually show you guys this. Ta-da! All right, we're cooking. Found the information here for you guys. I want to make sure I show you this to you because it's super interesting. This is some information on Hope. So we see the location here where we talked about before. all these points of interest and hope. Now, like I mentioned, my client secured this property here, lot 5, which I'm going to show you here. It's the first one here. So on the right, we can see the upstairs plan. So the upstairs is a three-bedroom home, and this is the main house. It's all on one level. It's upstairs, the living and the sleeping areas, and it actually has a covered patio upstairs. There is a den, a laundry, and the mechanical room and everything on the lower floor. There's no basement here, so this is very important. So the 2-bedroom legal suite is all above ground, and it has its own covered patio. So there's no dingy basement here. It's all full height windows, has its own bathroom, kitchen, living room as well. So let's run the numbers on this one here. So this is going to be 799. It's basically 800,000. Because it's brand new, we have to add the GST. So we're going to call this 840. Oops, 840. And with 20% down again. Now, this is going to be a rental for my client, so they're going to put 20% down. Actually, these guys have a little bit of an interesting financing scenario. But let's say, for example, you were going to put 20% down. So you'd need $168,000 down, plus your property transfer tax. But we have GST included in here because we're going to roll that into the mortgage. Now, interest rate 2.1%. Let me backtrack there. So if you were going to live in the main house and use this as your principal residence, we can work on this. It's below $1 million. So we can work on the down payment. Depending on your credit, again, depending on your income, all that kind of good stuff, we can work on getting that lower. But let's use this for this example, 2.1%. Taxes, we're going to put $2,000 for now. We're not sure exactly what that's going to be. So I'm going to err on the side of caution, put a higher amount. It's not been set yet by Hope, but we will figure that out as we go through. But let's use a higher amount. Maintenance. Now, everything's under warranty. You've got a 2-5-10 warranty. So any structural defects, any major things that go wrong with the home, you're going to be covered. But, as any home gets older, there will be things that come up. So why don't we go ahead? We'll set aside $150 a month for maintenance. I mean, we could even do $200 a month and start saving that up, $2,400 a year, put that into the kitty. And then in 5 years, things start breaking. The basement suite, the 2-bedroom basement suite, like I said, it's fully daylight. It's above ground. This will rent for $1,350 all day long. If you to rent the upstairs conservatively, even if we just say $2,000 for the upstairs, for the 3-bedroom upstairs, it brings us to $3,350. $3,350 in income with a 30-year amortization gives us $466 of positive cash flow every month. So yearly, when we look at that yearly, it's about $5,600 positive. And more importantly, with that principal reduction, it's $16,255 every year. So $16,255 times 5. I know I'm going pretty quick here, but that's almost $81,200 over 5 years of equity. So almost 10% of equity you're building over that 5-year period, give or take. What are we missing here? We're missing, like I said, property transfer tax is not included in this. Also, home insurance is not included in this. This is going to be a little bit more than the previous example, but don't forget you don't have a strata fee here. And in this case, there's no CMHC fee because you're putting 20% down. I'm just going to see what happens if we finance this down payment. Let's say if we pull this equity from a line of credit from your current property, $168,000, even after making that payment of $343, let's say your line of credit is 2.45, let's say it's 2.99, you're still $47. You're still basically breaking even. And then, of course, you have the cost of insurance as well. It's phenomenal numbers from a house, a brand new house that has warranty, 2 suites, for the price of less than a townhouse. This is wild. Even if we put 25-year AM, yeah, we're negative then. But we can go up to 30. We have 20% down here. So these numbers make sense. Look at that principal reduction. And then there is a number here for capital appreciation. I don't even like looking at that. But if it was to go up, let's say 2% on average, 2.5% per annum, you've got that as well as a very nice to have. So let me know what you think. A couple of good examples for you just to get started. It is still possible to find cash flow properties in Greater Vancouver. I know I've been talking for quite some time, but if you have any questions, if you have any comments, feel free to reach out to me anytime. You know where to find me. Thanks, guys. Have a great day.